I gotta
Uh,
try and go live here. Let me see what happens.
okay.
Good morning, traders and investors around the world. Welcome to this Friday, June 3rd edition of Pre-Market Prep with StockOdds. A little bit of a delayed start here this morning. Let me get the charts up, and we got a choppy seesaw session here, back and forth, back and forth, back and forth. But good thing Rob is here because he's going to tell us what the odds are saying for next week. Never even sniffed that pre-market high, 41.89, regular session high, 41.42 and a quarter. See if we can get back up there. Right now, not looking likely. Our current low, 41.15. If I said 15 and a half, if I said I had a level there for you, I'd be lying. There's nothing down there until the two lows from Thursday and Wednesday and Thursday. Down at 40.72 and a half. So 40.71 area. So are we going to end have a week where we end in the middle of the range, or are we going to have an extreme week where we end at the lower end of the range or the upper end of the range? Stay tuned. Crude is up $1.62, 118.49. Gold in the red by 7.30, 18.64.10. Silver in the red by 16 cents at 22.12. Bitcoin in the red by 765. We got a theme going here at 29,525. Ethereum in the red by $63 at 17.58.50. I'm gonna stop the screen share here, and I'm gonna bring in Rob. And Rob, man, we tried to rally a couple different times this week. Had a nice rally yesterday, but man, oh man, this is just looking more and more like a dead cat bounce in a bear market. What are you thinking?
Well, it's possible. We had a seasonality expectation for the first trading day, which was supposed to be up, and we had that battle because of all that negative news and the hurricane comment and all that. So, June 1st was down a little bit, and then nice rally yesterday, which is kind of what we were expecting to happen on the first, actually happened on the second. And then today is supposed to be up as well for the first Friday of June, historically. I think what, again, puts this stress on Fridays is this geopolitical risk over weekends, right? Like, so I think it's like, we don't want to get too carried away here for a Friday and carry all kinds of stuff over the weekend, and in case something really disastrous, as if we haven't had enough over the last couple of years. There's who knows what's going to happen this weekend. So that's the tension. But this Friday's supposed to be up. Of course, you got lots of news came out as well, and the focus for me is this month is really on the Russell.
Okay.
And
Okay.
let's talk about
before we go into that, can we
Yeah.
just go over a question from Zeus 2001 posted yesterday? Do you advocate beta weighting your hedge, or you just go dollar for dollar?
It's kind of like it works for you and against you depending on the type of day. So let's talk about the Russell, since I got it on the screen. Let's say, for example, I was to beta weight the Russell stocks. Generally, the betas are higher than the S&P stocks, so that becomes more of a concerning question. Like, a lot of times with lists that we pick from the S&P, the aggregate beta is not too far off from the SPY itself. SPY being 1, and like, it comes in somewhere between 0.89 and maybe 1.17 or something. So a lot of times it falls pretty close to 1, actually. When you move into the Russell, that's a different story. You're going to have betas that are 1.5, 1.7, 2, even on an aggregate basis, you're going to get way up there. So imagine this. Imagine that you had a really good read on the market in terms of sentiment and risk off, and it just looked like it was going to be an incredibly down day, all things considered. If you were to beta hedge with your ETFs on that particular day, or especially if you go into IWM and beta hedge on that, it's going to work for you, right? It's going to work for you. But now, on the other hand, if it was a screaming up day when, you know, most Russell stocks are up 4, 5, 6, 7, 8, 10%, then it's going to, you know, give you a bit of a problem. So it's like the answer isn't really in whether I always beta hedge. It's what stocks do I adjust for, or what type of market conditions do I adjust for? So in light of not having that degree of, say, trading experience, then I recommend just dollar for dollar, long dollars against short dollars, equally balanced. And in fact, even after, like, you know, deploying a lot of different strategies and a lot of different types of lists, the combined reality is your long dollars and short dollars are going to be need to be on a regular basis fairly balanced. So you want to choose to decouple that. Okay, let me give you an example. Market selling off like it did on June 1st, right? We had that nice slow sell off, but we did have a turn, right? We did have a turn where we came back. Even yesterday, it was choppy at first, and then we kind of broke through previous day's close again, and it started to get more traction, went up to the pre-market high, got more traction, and it continued on its way. When you have those road signs, when you read your indicators, when you're watching the breadth, when you're watching the trend, when you're watching the VIX, when you're watching Bitcoin, when you're, you know, the bonds, everything considered, when you have your indicators saying there's more risk on appetite, you know, then decoupling your hedges so that you're lowering your short dollar exposure works for you. Okay. But here's the thing. Don't make those decisions in choppy markets. Don't try to exert your will on the market and you know, try to make something happen. The market gives you the clues if you know, want to pay attention, right? You can drive down the road and miss a whole bunch of road signs. People do all the time. They drive into a construction zone on the road. They didn't barreling along. They didn't even see it. I don't know what they're listening to their tunes, thinking about something else, but they don't see the signs. So as a song once said, signs, signs everywhere, a sign. They are there, but don't overread, don't overanalyze, just make adjustments on really key information, right? And when you do start making adjustments, do it very incrementally. Like just reduce about 10% of the capital or 20% of the short capital and see if it's sticky, right? And if it's good, then you know, as it continues, another pullback, pulls back to a trend line, pulls back to a moving average or whatever, buying a little bit more and let the market work for you. If you're wrong, what do you get to do? Slap it back on, right? I mean, if it's like, I guess that was the end of the run, I'll put it back on. So you have more power than you think to, you know, one of those, you know, machines that you can work with the levers, you know, you move it this way and you turn, and, you know, it's kind of like that. You get to steer your capital exposure during the day. If you're not able to be around all day, well, it's better to be long dollar, short dollar balance.
Okay.
Right? If you're able to watch the market and participate and look at your indicators, then there's that opportunity to put, you know, the capital one way or the other.
Okay. All right. Let's go to your back to your Russell example. That was a good answer.
So this is June, right? This is Russell rebalance. We get the preliminary list today. So this is really important, I think. And we started the top 20 Russell list for subscribers as well. You know, performance can be extremely spectacular. It can work both ways. You can have a really good day or a really bad day, but generally there's more punchiness, there's more volatility. the betas are higher, as we mentioned. So June is a really great month to work the Russell stocks. And the expected performance out of the Russell itself is about 2.6% on average. So it might be another good month for it. But again, we got a backdrop of all kinds of problems. So Joel, what do you see here that concerns you about the Russell?
Let
You
me
know,
see. Let me
we're,
see what you're looking at here.
so we
Boom.
had this bottom of the channel, right? And we've kind
I
of,
gotta look at my chart because
you're gonna look
my charts are better.
you're, okay.
Hold on.
Yeah,
My
listen,
charts are
okay,
my charts are
okay.
better. Hold on.
I'm gonna have you
Um,
share then.
I mean,
Share your screen. Come on, share your screen, man.
it's fine. Well, you got to unshare.
I unshared.
Okay, it's fun to share. And this is where people. I mean, this is why I think it's good that have different different people on different opinions. See, for me, wow, I'm looking at Wednesday's low. That's a higher low, so that's good. So I mean, I'm just I don't know, and we're making a higher low so far today. So I'm not ready to jump off the cliff on the Russell here yet. I think for me, for right now, it's constructive. It looks better than the S&P, but the S&P is kind of doing it. We didn't make a higher low, but I don't know. I mean, if this thing hangs in here, I think it's a positive week for the Russell. So I don't know if that's what you were looking for or
Well,
not.
I'm looking for, your thoughts on it.
Yeah, I mean,
Technically, right?
much higher low yesterday, and then we haven't even touched that puppy yet today. So I'm bullish. I'm bullish the IWM.
Yeah, and we've got a little consolidation area to
Yeah,
clear for sure,
for sure.
right?
Yeah.
But if it can chew into that and not pull back too much, we could have build on this. So what does that mean? Well, if you have a backdrop of an index, being bullish, say that's this one might outperform the diamonds. People structure trades like this. They go, find the real nuggets within the IWM and use some of the big mature Dow stocks to be the hedges, or again use the sector ETFs. Now going back to this beta question again, the capital is really really important. So you could start your day with putting some sector ETFs on against the Russell stocks that you have. Now, the sector ones apply more specifically to the S&P 500 components, but they can still adequately cover, because you'll notice this: if XLV, the healthcare ETF, is significantly down, it's probably pulled not just the S&P 500 components that are healthcare down with it, but it's probably also pulled many of the small caps down with it. So there is that spillover that it affects even the small caps, because they follow the leadership a lot of times of the large caps, right? So if the large caps are performing well, like I'll give you an example, Joel. If Myrna, for example, performed well, right, or Pfizer performed well, or Lilly performed well, or Merck performed well, a lot of the small caps go, me too, me too. But what happens? They actually perform better. Did I lose you?
I don't know. No, I'm here. I'm here. My
Okay.
microphone cut out for
Okay.
I hit it with my hand,
But
I'm here.
but it's that sort of sympathy effect, right? It's like the large caps, could set the tone, and the small caps could really perform along with it. But even because of the volatility, even more so. So that's what I would structure is, think about having an adequate reference security for each stock that you want to trade. Well, what is the best hedge for this? And do I have to use it right away? Can I put it on ice and wait until it's needed? So yeah, I want you to make the most of the opportunity this month, because the index has that potential to perform according to its seasonality. Joel's given you the Oracle reading here on the Russell is doing really well.
And I mean, I'm just trying to call a spade there, because the S&P, I mean, a higher low is a higher low, right? I mean, the S&P is, we matched it yesterday because of Microsoft, but I don't know. I mean, the market's refusing to give in here.
Yeah, so that's going to be our theme, is choosing some nuggets from the Russell, and working towards the there'll be some rebalance plays. Like we had the preliminary list out, and we have the first Friday, which is today, the Russell rebalance list, and next Friday we get it revised, and then following Friday we get it revised, and then the 24th have the rebalance, right?
Okay.
So it's an opportunity for good movement and good good follow through. But again, hedging is something that is important. You need to be prepared for, but it's really your choice of what you want to use. Because at the end of the day, if you hedge completely, efficiently and securely, you make or lose a tiny little bit. If you open that up, you make or lose more. So it's really up to you to decide, how do you want that to look, and do you have enough experience to get a flavor of the day, whether it's a risk on day versus risk off? Because if it's a risk on day, and like we had yesterday, it maybe you didn't know it at first. I mean, the way we opened yesterday, we're down a little bit from the open and choppy right afterwards for the first hour to hour and a half or so. So there's some days where you'll hedge right away because you don't have any other information. But if it starts to, give you stuff to track on, sorry,
that's okay. That's okay.
If you start to see some traction there, then you have the ability to decouple that capital and let the stocks shine.
All right, I just want to, there's a comment here from Michael Crockett. Big change in sentiment, negative news, and part of positive market reaction is telling. I'm not sure exactly what you're referring to. I mean,
the backdrop of news is still there, but we see people willing to come back in and buy stuff like yesterday.
Yeah.
So we climbed the wall of worry. I mean, like, what's been astounding is some of the comments that we've had in the last few weeks. Nobody should own stocks, or stocks are uninvestable. These kind of things are a big opportunity for us to think about, where's the crowd, where's the herd? Are the herd usually right? Are they usually wrong? Is there?
Yeah, he's referring, I'm going to go on to screen share here yesterday, and he's referring more to, and I agree with him, Microsoft yesterday. I mean, they got that thing down $12, right? From the open, and it came back. Now it's down nearly 4 sticks today. So I don't think that, like, the overall, I mean, the initial reaction was bing, sell. So I don't think we're quite out of the woods here yet, but I just want to pull up Microsoft here, and I'm going to do Crowdstrike, and then we can wrap it up for today. But for Microsoft, what I would do, I mentioned that, the 50%, we hit that yesterday. So that's your all-tell level. If that breach, we're going to the low of the move. But Michael, I don't know if you're a Microsoft trader, or, if it's in your portfolio. I think it's really important to keep an eye on this close from yesterday of 274.58. That's big. So until we get back above 274.58, I know that was a fluffy close yesterday. The jury is still out, right? 272.42 was the low the day before they gave the news. It actually went up on the news. But, let's see how the market digests the move moving forward. Today, we're in the red. So I don't know if the jury's still out on Microsoft.
We had a daily gap fill there as well, which, sort of relieved that pressure. I mean, of course, that gap was similar to all the gaps on many large cap, because the S&P gap that day too. But some have not filled the gap, and Microsoft certainly did. So that pressure's off.
Okay, I'm going to do one more here. Martin Contreras is asking about Crowdstrike here. I did not look at the report too closely, but man, this is what I'm looking at here. You haven't. I would have been a buyer in the lower 150, 154, 155, because that would have been half of the move. But I mean, you just got to look at this. Just look at these. I'm going to get rid of this retracement here because I want to draw a line. But Martin, I think if you're looking at this, I'm sure you're trying to trade it from the long side. I mean, there's just a level of support there from 158 to 161. You've had one, two, three, four, five lows in that area. What that's telling me is that you got a larger player trying to accumulate stock at 160, the 160 area. They're not, they drop a little bit. Maybe they got some in the 158 handle. They couldn't get enough. Now they're trying to get it in the 161 handle. So it's holding up. I know didn't have good earnings today, but that's the level I'd keep an eye on. If you lose that, I don't know about an intraday basis, but a closing basis, I think you'll go back down. I just don't know if you're gonna just crank right back down there. But that's it. Pre-market prep with stock odds here on this Friday. Rob, thanks for joining me. Great information. You got one more thing?
I just looked up Microsoft for sort of the 3-day, 5-day thing. So looking at after yesterday's performance that we had there, kind of on an intraday basis as well as where it closed. It's looking reasonably positive. 57 odds.
Okay.
55, 57 on the different indicators for the 3-day, 5-day outcome. So I would put that also into the
equation.
the data backdrop on that. So
okay. All right. Pre-market prep with stock odds wrapping up, guys. I'm going to do some broadcasting at noon. Today's Spencer Israel's last day at Benzinga, and I'm going to hop on BZ Live with him and talk some charts, talk some markets. So if you guys haven't got enough of me yet today, join me at noon on Benzinga YouTube BZ Live, and if not, I'll be at the close, Spencer's final show. That will be at 3:30 Eastern Standard Time. Everyone, have a good one.
Have a good one.